continuity plan. The plan was prepared and executed in a matter of days. The MPC noted that global economic activity has come to a near standstill as COVID-19 related lockdowns and social distancing are imposed across a widening swath of affected countries. Expectations of a shallow recovery in 2020 from 2019's decade low in global growth have been dashed. The outlook is now heavily contingent upon the intensity, spread and duration of the pandemic. There is a rising probability that large parts of the global economy will slip into recession. Turning to growth in India, the implied GDP growth of 4.7% in Q4 of 1920 in the second advance estimates of the National Statistics Office, which was released in February 2020, within the annual estimate of 5% for the year as a whole, is now at risk. As regards the outlook for 2021, apart from continuing resilience of agriculture and allied activities, most other sectors of the economy will be adversely impacted by the pandemic, depending upon, I repeat, its intensity, spread and duration. We have to recognize that the government has taken timely and appropriate measures to contain these three factors, that is to contain intensity, spread and duration. And let us all cooperate with the measures announced by the government to deal with the problem, to prevent the spread of coronavirus, to contain it and win this war. If COVID-19 is prolonged and supply chain disruptions get accentuated, now these are risk factors which I am listing out. It all depends how we respond to the situation. I'm just listing out the risk factors. Only time will tell how effectively we have acted as a nation and how effectively we have been able to contain the spread of coronavirus and how effectively we have been able to restrict its adverse impact on our growth. So if COVID-19 is prolonged and the supply chain disruptions get accentuated, the global slowdown could deepen with adverse implications for India. The slump in international crude prices could, however, provide some relief in the form of terms of trade gains. Downside risks to growth arise from the spread of COVID-19 and prolonged lockdowns. Upside growth impulses are expected to emanate from monetary, fiscal and other policy measures and the early containment of COVID-19. As regards inflation, the prints of January and February 2020 indicate that actual outcomes for the quarter are running 30 basis points above our earlier projections, reflecting the onion price shock. Looking ahead, food prices may soften even further under the beneficial effects of the record food grain and horticulture production, at least till the onset of the usual summer uptick. Furthermore, the collapse in the crude prices could work towards easing both fuel and core inflation pressures depending on the level of pass-through to the retail prices. As a consequence of COVID-19, aggregate demand may weaken and ease core inflation further. Heightened volatility in financial markets could also have a bearing on inflation. Given this heightened volatility, unprecedented uncertainty and extremely fluid state of affairs, projections of growth and inflation would be heavily contingent on, as I earlier said, the intensity, spread and duration of COVID-19. Precisely for these reasons, the MPC decided to refrain from giving out specific growth and inflation numbers because the situation is fast changing and the outlook is extremely uncertain. In fact, this kind of uncertain outlook has never been seen before. And as I mentioned earlier, I would again like to repeat that if we, all of us, every citizen, every person who lives in this country, if we follow the rules, if we follow the advices given by the government and other authorities, then as a country we should be able to win this war against COVID-19, in which case much of the worries that we have in our growth outlook would get considerably reduced. The MPC noted that macroeconomic risks both on the demand and supply side brought on by the pandemic could be severe. The need of the hour is to do whatever is necessary to shield the domestic economy from the pandemic. The Government of India has yesterday announced a number of measures which are expected to provide relief to various disadvantaged sections of the society. The MPC further noted that the Reserve Bank has taken several measures to inject substantial liquidity in the system. Nonetheless, the priority is to undertake strong and purposeful action in order to minimize the adverse macroeconomic impact of the pandemic. It also underscored the need for all stakeholders to fight against the pandemic. Banks and other financial institutions should do all that they can to keep the credit flowing to the economic agents which are facing financial stress on account of the isolation that the virus has imposed. Market participants should work with regulators like the Reserve Bank and the SEBI to ensure the orderly functioning of markets in their role of price discovery and financial intermediation. Strong fiscal measures are of course critical to deal with the situation. To summarize, COVID-19 stalks the global economy and the outlook is highly uncertain and of course negative. Several nations are battling its exponential contagion. Countries are shutting down to prevent being sucked into a kind of black hole. Authorities all over the world are mobilizing on a massive scale to fight an invisible assassin. India has locked down economic activity and financial markets are under severe stress. Finance is the lifeline of the economy. Keeping it flowing is the paramount objective of the Reserve Bank of India at this point of time. The time has therefore now come for the Reserve Bank to unleash an array of instruments from its arsenal to staunch and mitigate the impact of COVID-19, revive growth and above all, preserve financial stability. The aggregate action and stance of MPC provides a befitting launching pad. In turn, the configuration of initiatives unveiled in the Statement on Development and Regulatory Policies, which I am now going to spell out, amplify the MPC's decision and leverages on it as well. Accordingly, it is appropriate that the MPC's decision and the other actions which I am now going to elaborate upon should be regarded as a comprehensive package with force multipliers. The developmental and regulatory policies can broadly be delineated under 4 categories. First, measures to expand liquidity in the system sizably to ensure that financial markets and institutions are able to function normally in the face of COVID-related